Hello, how are we doing? We are going to continue with our sessions, and we are still doing trial balance. Yeah, I really want us to get it all when the examiner said anything to do with the trial balance. So we have more like 3 questions to go. Then we will be done on this topic on trial balance. So today we are going to handle this question. And the question, of course, let's go to what they want us to do. Prepare an audit schedule with the following headings. We need to have original trial balance, need to have adjustments, then adjusted ones, then draft of profit or loss items, and also the draft of financial statement items. So this is what we are going to do. Maybe we can read the question. Following trial balance has been extracted from the book of Jaber Limited on 31st March 2022. So here we have the particulars, then we have the balances per each account. Then we can read the additional information. Following additional information is stock on 31st March 20. It ought to be 2022, not 2018. 2022 was 308,000. 308,000. So, and mark you that our books, we are preparing the TB for Jaber Limited on 31st March 2022, and our stock at that period was 308. So, this implies that at the end of whatever we are going to adjust, we need to make sure that in our adjustment column, we have 308,000 as our closing stock for 308 amount for our closing stock for Jaber. Then depreciation is to be charged on plant and machinery at 5% and furniture and fittings at 6%. I think the question is open. It has not told us whether they use straight line method or reducing balance method. So we'll just adjust using the straight line method. Yeah, so loose tools are revalued at Kenya shillings. It is 160. So the implication of this, when it comes to revaluation at it and revaluation by, maybe I can write it here, revaluation or revalued at stroke by, when you find a question that has told you that whatever the item was revalued at or the item was revalued by, that implies that is the final figure in your balance sheet when you are calculating the PPE. And when you are being told is to be revalued to, or the item is to be revalued to, the implication is that there is an increment to that figure. So there is an adjustment to when you are calculating your PPE in the balance sheet. Then we have provision for doubtful debts to be maintained at 5% on debtors. Remuneration of was accrual. And in our last video, we said when it comes to accrual, accrued is an expense that ought to have been, that was incurred in that period. Let's say that for Jaber ending 31st March, it implies that that item was already spent or the expenditure was already done, so it was then accrued. Then we come to prepayment. It implies that for prepayment, we gave an example of rent, and we said that most of the time, of course, rent or health insurance, we prepay. But what we will focus at when we are calculating the income statement, we will focus on the expenses for the year. Anything to do with the prepayment for, maybe let me talk an example of let me talk about health cover. And this health cover is we have paid for from 31st. First, let me talk about 31st March to 2020. Let me talk about 2021 to 31st. 31st. We covered for till 31st. What do we call it? We can say 31st August 2022. And mark you, the examiner has told you that the for this book, the year ends at 31st March 2022. So what we will focus on, we will focus from 31st March 2021 to 31st March 2022. And anything prepaid for the following period, it is not going to affect our income statement. Rather, we will have it as a prepayment in our balance sheet under the current assets. So that is it. So we can go direct to the question and see on how we can be able to handle this. So what I will do is, because we have some adjustment, I'll just copy this column, this part, then copy. I will come paste it here, Control V. Why is it bringing a lot of spacing? Let me try to do what? To do something here. Okay. So copy to V. The same thing. What will we do? Maybe what we can do, we will use the same template for adjustments, so that it will not take us a lot of time to do this question. Yeah. So here maybe we can bring the more, what do you call it? We will bring the adjustments that are additional information. So here is our original. Please mark you that this is the original information, or the original template you are being given by the examiner. So what will come, the examiner said that we need to make sure that you have a debit and a credit column for each. So this is what we will do. We'll come here, we will maintain the Kenya shillings column. We can do Kenya shillings that way. Then on Kenya shillings, we will have here debit, then we have credit column. I think then we will have to copy and paste just to make our work easier. It is better for you to do this before you start the question. It literally makes your work easier than doing each column or each category with its own particulars. Insert. I want to insert something here just to make my work clean and appealing to the eye. Okay. And I hope the font is clear enough that you can be able to see. I trust so. Okay. Okay. So for this one, just to make it a little bit different. This is what we will gonna do. What will we do here? Okay. So then here, we're gonna use something like which color? Which color? Can use that one. Okay, then we come here. Okay. Okay. So this is what we will have. Not that bad. Yeah, I think it is a bit appealing to the eye. So let me just expand a little bit so that our figures might be clear. Okay. Okay, here I will put my commas already so that okay, good one. Okay, so after that here I will come and do my Alt plus the addition of the entire column, this one of the debit side, before even I start inserting my figures. Then I will do copy, then I will paste here, Control V, Control V, Control V. Okay. Okay. Yeah, so we can be able to start, and let's now have something here. Columns here. Yeah. Then we can have this in bold, Control bold. Okay. Yeah, want to be in bold. Okay. Sawa sawa. So we can start. So drawing, because drawing is a debit. It has a debit. It is a debit item or has a debit entry. We have plant and machinery, a current fixed asset that is here, 1 million. Debit entry, furniture's the same. It is under PPE or is it the fixed asset? Okay, yeah, fixed asset. Capital account, it is a credit, has a credit entry. Then what else? We have sales a credit entry. This one, loose tools, we treat it under PPE, fixed asset. Goodwill fixed asset, it is up there. Opening stock, it is an inventory or it is a current asset, debit. Then return outwards. I think in our last video, we talked about return outwards and return inwards. And we say that return outwards, of course, it affects our purchases. We are returning goods. So the implication of that, and that is why when you are calculating the cost of sales, cost of sales, you ought to subtract from the purchases, you ought to subtract whatever has been taken back. So that one has a credit entry. Then we have discount, because it is an expense to the organization. Then we have purchases, it is a debit. Then we have return outwards the other way around is now affecting the sales. Now, just a minute, on wages, before we go to that one, on wages, it is an expense to the organization. Creditors payable, that is a current liability. Then we have doubtful debts. Here, it is an asset, a liability. Carriage inward, and we will discuss that one. Then we have salaries. It is an expense. General expenses, rent. Rent is an expense. Postage. It is an expense. Okay, it is a debit. I'm doing the debit, whatever. Debit, it has a debit entry. Then what is this? A data is a debit entry. I think this ought not to be here. This is something I try to eliminate. Cash and cash, that is current. Is it current? Current asset. Okay. So we go back to return inwards. Return inwards, when you are calculating now the final figure for yourself, we normally deduct return inwards from ourselves. And it is where now you are now the supplier, you're returning goods. So it will, this is how it will affect. It has a debit entry. Then this one is an expense. Okay, sorry for this, guys. Sorry for this. So we on carriage inwards is an expense. It's an expense where you transport your goods from the supplier to your own premises. So that one has a debit entry. Then we were here somewhere, return inwards. Return inwards is where you sell goods and they are returning back to you. So of course they will affect your sales and will have a debit entry. Okay, fine. So sometime when the examiner gives you the question, it might or might not balance. So what I do, it is I'll come here and say Alt plus to get the total amount. I hope I've captured everything. Okay, so on Alt plus we have 13,980. Then I'll come here and do the addition of the two, to see whether I will get the same. It is the same, so it means I have captured everything, but the books from the beginning were not balancing. So we will just continue the way it is. And sometimes the examiner can give you a question that literally it will balance to, we'll have 70-60 to each both sides. But I think here we have a difference of what to balance? This one minus this one, of around 140. Have I captured everything? Yes, I have done that. Okay, sawa sawa. So we can just proceed the way the question is. And now here it is now our original TB, our original trial balance. Okay, then here original trial balance, then here we will have, what do we call it, adjustments. So the adjustment will get them from the additional information. And number one, additional information, it says, let me just delete this so that we can have more space for calculation. It said stock on 31st March 2022 was 308,000. So the implication of this, we have stock here, we have opening stock. I saw it somewhere, opening stock. Where is it? Yes, we have opening stock of 200,000, and we have a closing stock of 308. The implication is there are some of the items that were bought during that period or that year. So what we will do, we will get 308, 1, 2, 3, to find out how many, or the equivalent in cash of the goods that were bought during that year. So we'll take this one, then we will subtract our opening. Okay, that's what we will get, and that is what is supposed to be in the adjustment. So that is done. Then we have here depreciation is to be charged on 5%, and machinery. So we'll start with plant. We come here, and plant is saying depreciation. So I'm pretty sure that we do not have a depreciation account here. Let me just try to delete this one. Then we come here and say depreciation on plant. If we have depreciation and we are not given or are we given the accumulated depreciation for the plant? No. So we'll have it will affect the depreciation account in the expenses. And also when you are adjusting your PPE in the balance sheet, you need to have accumulated depreciation. So you're not given that account for accumulated depreciation. You'll have to create. So you'll have to create two accounts for the plant. You'll have to calculate to have an adjustment for the depreciation and also an adjustment for accumulated depreciation. Depreciation on plant. Okay, so on depreciation, we are being told, of course, remember that depreciation is an expense. It will have what do we call it? A debit entry times. They are saying depreciation is to be charged on plant and machinery. So I need to add plant and machinery at 5%. So we'll come here, and here it is. Guys, here is my formula. I have done 5% of the plant and machinery cost, whatever, the cost amount that I'm being given for the plant and machinery. So I will enter. So it is plant. You can just make some plant and machinery. Just make adjustment there. So we'll copy the same. Copy. Okay, Control V. Plant and machinery. So if you debit, of course, every additional information, you need to have a credit and a debit entry. Please, anytime you are debiting, you make sure you are also crediting. So here on depreciation, then we'll have to credit the accumulated depreciation with the same amount. There's something we did. Oh yeah, we forgot to adjust on the opening stock. So that amount, every time you're given opening stock, closing stock, of course, it affects your trading account. So we'll come here and create something we call trading account, or we will create profit and loss account. Of course, it will affect that account, loss account, so that our nini can be able to balance. So here we go. So 108,000. Okay, with the same amount. So I'll just copy is equal to that amount. So at least our additional information are reconciling. And furnitures, we continue with B, furnitures and fitting at 6%. So we'll come here and say depreciation, copy, Control V, copy, Control V. So we are being told on furnitures and fittings, I will just say FF. Depreciation on FF, furnitures and fitting. Then also here on the accumulated depreciation, I will also say accumulated depreciation on FF. Okay. So if that is the case, we will come here, they are saying of 6%. So we will come here, accumulated is 6% times what we were given in the question. What is that? Fittings. Okay, 120. The same, we will do the same to accumulated depreciation. We said we debit, we credit anytime we are given additional information. Then we have loose tools are revalued at the final figure for the loose tools, and this is what we will be able to do. So we will also have revaluation, because I'm pretty sure we do not have revaluation account, or you can just call it revaluation. And here is what we will do. They are saying that this item will be revalued to, let me just write here the amount, 123. Okay, so what we will do, it is we come here. Where is that item? Okay. Okay. So it was 200, then it was revalued to 160. Of course, there is a loss. There is a loss for that revaluation. So this is what we will do. This one, what do we ought to? This one minus 160, 123. Okay, so that, yes, it will give you that amount. So if that we have credited that, then on revaluation account, guys, you remember when you're calculating your income statement, down there we normally do have either revaluation gain or revaluation loss. So that is how you'll be able to adjust. So we'll come here and say it's equal to revaluation with debit. It's equal to the same amount. Okay. I think we will need more space down here. Just to, okay. Yes, so that is what we'll try to do. Okay. Just in a few we will continue. Then I don't know fields. Okay. So we are done with that one. Revaluation, we will come and provision. I think my space seemed to be so tiny. Let's try to move this down again. Yes, and try to work with okay. I hope this will give us a good service. Just hope so. Then we have control. Let's just copy it the way it is up to there. Okay. Sawa. So here we will do this, because I'm feeling that we still have more additional information. So and we will need to, yes. So on that one, what we will do is provision. We have provision for doubtful debts is to be maintained 5% on debtors. So we go where the provision for doubtful debts is. We have provision. Wanasema it is supposed to be maintained at 5% of the whatever we have in the debtors account. So this is what we will be able to do. So this is what we'll have to do. It's equal to 5. They said which percentage? They said 5% times what do we have in debtors account? It is this amount. Okay, we get 28,000. Okay, so this, what the implication of this, of course, we will take this one minus this one. Okay, let me try to, yes, if this one, okay, fine. So we will go back to, what do you call it, debtors account, and do the same adjustment. Okay, we will continue. Remuneration was accrued at, so we come here and create accrual account, and also we will need a prepayment account. I meant prepayment. Oh God, it's the prepayment. See, prepayment. Yes, that one. So prepayment, we are being told it was accrued, that is remuneration. Let's go to remuneration. We will, where is it? Remuneration. Okay, or we do not have that account, we need to create. Let me just find out. So, no, we will have also to create a remuneration account. I'm not seeing it. In case you see it, it implies that we ought not to remuneration account. I have not seen it. Or do we have something to do with salaries? Yes, we have salaries. We will use the salaries account. So on salaries, we are being told in this amount, where is it? 416, we have the one that was accrued of how much? Of 20,000. So we'll have to add back. Then on that one, it implies that it affects our accrual amount with the same amount, 20,000. Okay. On the repayment is affecting our insurance. Let's see whether we have an insurance account here. Insurance. Okay, let's go through it slowly. Okay. Rent. Okay, we will have to create insurance account. We do not have it. Insurance expenses. It is an expense. So it implies that on that one, we will have this amount of is equal to or prepayment of 4,000. And it will also affect our prepayment. No, not really, guys. Let me explain something. We will not be able to adjust that item, because anytime you are given something to do with prepayment, And when you go to the additional information, you do not get that item, please forget about it. Just leave it to the examiner to handle it. Because remember that we said when you are given something to do with prepayment, you only focus on the expenses for that year. So the implication is that for insurance, I can't really see insurance in this column, in this whatever we are given. So if you do not have insurance, it means what you are given is what was prepaid. And what was prepaid, it is not affecting our income statement. So you leave it alone. I hope that is clear. So we will just proceed with this, whatever we have done. Then on adjustment, if we are done, what can we do? We can continue from our next class just to, or you can continue doing this question. Yeah, then we meet in the next class and see on how we can do the adjustment and come up with the profit and loss item and also the balance sheet item. So thank you so much for today and have a blessed evening.